Well, all three factors I think are haunting lives. Now, I mean, the last 1.5 year, the first 6 months was tariff, the next 6 months was AI, which was a concern, and then the last 6 months was war. I think now all three of these factors are now hitting us with the tariff in play back again, crude back to $100, and then the AI concerns across the globe, reducing sell-off across the globe. So I think it's all three factors hitting up. I just hope that it doesn't accentuate for the market in terms of the pain for the indices going forward. But I think yes, today's day could be very, very crucial in that sense. So technically, the 23,800 levels where we've been just hanging around for the last 27, 28 days, that level will not just be tested today, but we'll see whether on closing basis we break below that level or not for the indices. And if we do, and if we open with a gap down, and if we don't close the gap for the indices, then that could be a bigger concern, because the earlier move for the index when it entered into this consolidation was on a gap up. And to counter that, if we see a gap down and the gap doesn't close, then this creates a very bearish pattern for the index over the near term. So I'll just wait for today's price action. Hopefully in the second half, if we manage to even just close the gap by a thin margin, that will also be an indication that the pace of sell-off will at least be a little bit lesser.
Kunal, 23,500, a base for now?
Yeah, so now I think you're looking at 23,500, which could be a base for the index, but I don't sense that it will probably halt or stop over there for the index in case, because this is a major 500, 600 point grind for the last 2 months where the index was going through. So if there is any kind of a reversal of sorts, it could be at least 500 points lower from that 23,800 mark. So the bare minimum which I would probably expect for the index in case if, as I said, the gap doesn't fill in, should be 23,300.
And which are the stocks which will be in focus? Of course, IT will be there, but private sector banks will be in focus.
Yeah, so I think private sector banking stocks could be the one which could be at the receiving end. So the last
There's an expiry also which is underway, right? So
the last 4-5 days or so, couple of weeks, we've seen the pattern for the markets that stocks which have not delivered positive news, results, etc. Those stocks have not seen a 2, 3, 4, 5% correction. Many of the stocks have seen a 10% plus kind of a correction. So it's the market is in the mood of being very relentless in terms of punishing the stocks which have not delivered. So that I believe is a concern, and we were discussing the setup yesterday evening that the setup for this kind of a environment tells you that the market mood is a bit more fragile as compared to more stable, because negative news flow in a good market could be digested, but negative news flow in a market which is very, very volatile and fragile, I think it's not taken on a positive stride. Banks could be a bigger concern. Private sector banking names could be one of the sectors which I believe could probably show some signs of maybe a reversal, further reversal. Now, you had large cap private sector banking names. Maybe there could be time that the mid caps and the tier 2 banking names would also start to buckle under pressure.